Thank you for joining me here today. I'm very happy to see you in this market recap. We look at the market to decide which direction should we trade, on the long side, on the short side, or stand aside. We have our own trading systems and we also have access to different media news. Sometimes what we hear or sometimes what we even see at first glance may not be what is truly going on. We need to investigate a bit more to see whether the market is really bullish. Now that begs the question, what is the meaning of market being bullish? Market went up this week. Does it mean the market is bullish? Yes, in one sense it is like that. On the other hand, if we have to ask the question that as far as swing trading is concerned, these videos of mine are primarily focused on swing trading. If we ask the question therefore that if we are swing trading and as far as swing trading is concerned, is this a market where I would like to go long? Then the answer doesn't become so straightforward. Yes, the market went up, but answer to that question whether for swing trading it is the time to buy or short or stand aside is not so straightforward. It is not so clearly bullish, and we'll find out why in today's session, and furthermore we'll find out in the current market how to identify high probability buy candidates. Greetings, I am Sagar Nandi, retired IT professional swing trading stocks. I make these weekly videos to show how I use the systems that I use, that is Q systems, to find profitable trades in any market condition, and also I often discuss how I manage those trades. These are the different Q components I use. All of them run on Metastock platform, and some of them, the technical analysis, runs on TradeStation as well. That was the last slide. No, important slide is there. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It's not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. And that was the last slide. Now, I mentioned in the beginning that it is not always what we see at first glance that is really going on. And I made a series of tweets on my Twitter handle, X handle Superior Profit, regarding that. Let's go through some of those tweets. This is a tweet I shared on April 27. The market went up, that is on Friday, ostensibly driven by mega caps, specifically Google and Microsoft, who announced earnings after market close on Thursday. Why I said ostensibly? Because that was not the real driver of the market on Friday after the open. Though QQQ kept on going up after the open, that was not the case for Google and Microsoft. Therefore, though the media may have us believe that because of Google and Microsoft QQQ went up or the market went up, that was not really true. Yes, the market could have opened at least partly due to the earnings results of Google and Microsoft, but after the open, the gain was not driven by Google and Microsoft. Further down, I noted that QQQ went up by 4.35% from the low of 22nd April. That is here. But I am not going to buy it today. Why? Because the weekly backdrop is remaining bearish and daily is right at the yellow direction line resistance. In fact, if QQQ turns down from here, that will create what is called an ice hole failure, a bearish pattern. There are stocks that I am considering buying, but they are not technology stocks. In fact, if QQQ indeed creates an ice hole failure next week, I may look to short. Now, I mentioned that Google and Microsoft did not go up after the open. Is it truly the case? Let's find out. This is Google using the pivot chart 10-minute interval. Thursday's close, Friday's open. Huge gap up open. However, after the open, it traded lower. Never went above early range high. So after Friday's open, QQQ's up move or the market's up move in general could not be attributed to Google. What about Microsoft? The other stock that announced earnings after market close on Thursday. Again, Thursday's close is here, Friday's open, but after the open, it actually traded lower. So once again, after the open, QQQs and the market's up move could not be attributed to Microsoft. Some other mega caps did go up after the open. Let's look at Nvidia, one of them. Thursday's close, Friday's open, not a gap up open, slight up move at the open but not a gap up open, and then throughout the day it traded higher. Some mega caps did go up, some did go down after the open on Friday. Overall, how did the mega caps do on Friday? We can find that out from the mega cap custom index. We have the backdrop weekly chart on the left, daily chart on the right. This is Friday's candle. It is a doji candle. Opening and closing, you may say at exactly the same point for all practical purposes. So if opening and closing of mega cap index as a whole is the same on Friday, market's up move after the open on Friday could not be because of mega caps. Though that is what the media or many other analysts would have us believe. If we have to trade with confidence, if we have to trade with consistent profit, we need to find what is really going on. And that is the theme of this session. Friday's market move after the open could not have happened because of mega caps. It seems that using that news, someone might say hype, other stocks went up throughout the day, and that led to the market going up on Friday. Let's look at the market as a whole. QQQ I already showed. If anything, it may create an ice hole failure next week. I'm not going to short now, but I'm going to keep an eye on that. Weekly is remaining bearish. Other than ice hole failure, what I am looking for in daily next week is a magenta bearish flow candle. If that bearish flow candle comes in daily, because the weekly is already magenta bearish, we'll have a flow trend following short setup. In fact, that is the first trend following short setup that we'll have in a long time. That will be the first trend following short setup in QQQ. I'm going to keep an eye on that. Another reason I'm going to keep an eye on that is because if you look on the Q signals, we had a big move down 3. The last big move down 3, parent of all bearish momentum, was at this point. That low was indeed breached. As I have often mentioned, once market goes up a lot, if all of a sudden a big move down 3 bearish momentum candle happens, eventually the stock, in case of a stock with weak fundamentals, it comes down, and for stocks with weak fundamentals, a profitable trading techniques is to use short call vertical at that point. This is not a stock. However, when the big move down 3 came, I was watching to see if this low is taken out, which was indeed taken out at this point by another big move 3 candle. The big move the big move down 3 coming here shows that now it is becoming more bearish. We already have lower low. The moment we have a flow bearish candle, we will have the first successful trend following short signal in QQQ in a long time. No reason to look for buying QQQ at this point. SPY. Similar to QQQ, it is also having bearish backdrop in weekly. Daily recovered somewhat. Friday's candle is indecisive in shape. There is no buy signal here. Again, if price comes down, it may give us a short setup, that is a flow trend following short setup if we have a bearish flow candle in daily. Dia. Dia is underperforming the market. It is inside a triangle in daily, no clear direction. Weekly is indecisive, no clear direction. In this case, we'll have to see if a breakout is happening and then trade in that direction. Before the breakout, it will be indecisive, it will remain inside the triangle. And lastly, small cap stocks, IWM. Here also the weekly color is remaining bearish. Daily has gone up after going below lower boundary, the oversold situation. It is near the declining yellow direction line. There is no buy setup here. Once again, if it declines from here, or even better tries to go above the yellow direction line and then declines, that will create an ISOL failure, and if it gives a bearish flow candle in daily at that time, it will give the trend following short signal here as well. So 3 of the 4 market ETFs, SPY, QQQ and IWM, are in a place where it may give a short setup next week. I'll keep an eye on that. They have not given the short setup yet. So I'll wait for that to happen. If it goes up from here, we'll have to see what kind of buy signals are coming. For all these market ETFs in the daily, we now have a lower low. That is not the best market to start buying. I did buy some time ago and I publicly announced that in the market recap, that was using the oversold situation which I could see on the Q market breadth total view using two of the oscillators. One was percentage of stocks above 50-day moving average that became oversold, and 3-month new high low, the second oscillator, that also became oversold. That was 2 weeks ago. And right at that point, I started buying fundamentally strong stocks that were giving proper buy setups, and I closed most of them, if not all, with a profit. Prior to that, I was buying only high dividend yield stocks. At the oversold situation, I anticipated a up move. I found stocks that were starting to go up and I bought them. Now I am not going to buy. How are the signals from these oscillators now? 3-month new high low is a faster oscillator. From oversold situation, it went to neutral, slightly bullish you may say, but now it has come down again in the lower half. It's like the market ETFs that we saw created a new lower low, tried to go up, already created a new lower high and came down. So it created a lower low, lower high pattern already that we are not seeing yet in the market ETFs. So that pattern is bearish. Is growth or is value in favor? I'll say it is more or less indecisive. Nothing is in favor now. Between small cap and large cap, small cap is again starting to go down. For a short while, small cap was starting to go up, and I suggested and I did buy some small caps at that time. But overall, now that the line is declining again, small cap is not in favor. That is the overall market situation. Nothing is glaringly bullish so far, neither in the external view of the market ETFs nor in the market breadth view of internals. At the same time, if we look at the technical breadth, which is very important if we want to be on the right side of the market, Friday's technical breadth is overall bullish. About 59% of all setups are bullish. As far as strength setups are concerned, they are also bullish. Interestingly, continuations are more bearish than bullish, and reversals are more bullish. So we could look for reversal buy setups or strength buy setups, that is breakout and gap buy setups. Reversals meaning headwind, box or bounce. For continuation, they are more bearish than bullish. This continuation has flow as one of the setups. That is the setup I am anticipating in some of the market ETFs next week. Maybe Monday, maybe not, may not come at all, but I am looking for that, and I am doing this session live. It is interesting that the continuation patterns are actually more bearish than bullish. So on hindsight, my anticipation is not without reason from the technical breadth perspective as well. Still, overall, it is remaining bullish for Friday. And if we look for the whole week, that is also bullish across all categories. Therefore, we have reasons to look for buy setups. I already analyzed QQQ. I already explained that what the media may be saying about Google, Microsoft driving Friday's market up move, which was a large up move. That is not correct. So I may not look for technology stocks. Using that media news, you may say hype. Many people might have bought or thinking of buying technology stocks. When I see the hype is not rooted into meaningful market move, I'm not going to look for technology stocks probably, but I may look for other stocks to buy. But before looking at stocks, let's also look at the sector industry stock breadth. And the weekly period is bullish across the board. Friday's period is also bullish across the board. So if we look at the weekly sector industry stock breadth or daily sector industry stock breadth, both of them allow us to buy. On the other hand, if we look at the overall picture, longer term 1 month bearish across sector industry stocks, 10-day period bearishness reduced, 5-day period became bullish, 2-day period is actually bearish. What does it mean? Friday market went up ostensibly because of the positive news on Microsoft and Google, but that move of Friday was not enough to turn the 2-day period to bullish. It was a feeble market move overall, bullish move on Friday, but feeble when we look at the 2-day period. It is still giving us reasons to buy, but with some caution because there seems to be a flip-flop pattern, bearish, bullish, bearish, bullish. What will come next? We have to see. As of today, it is bullish. The bucket analysis, when we look at it, it is neither overbought nor oversold. More of the peaks are on the left side of the midpoint, so it is bearish, and not very bearish, but it is bearish because 55% of S&P 1500 stocks are below mid Bollinger Band. And now if the market comes down from here, what will effectively happen is that bucket analysis going to oversold situation, recovering somewhat now and going down again, that will create something like a lower high, lower low pattern in bucket analysis as well. That will be the time to start shorting. Now, if we look at one more tweet earlier, I'm scrolling down. I did look for some possible shorting candidates. Market was still bullish, and I shared this tweet, and I would like to explain the pattern. That is what I shared on 24th April. Market was still going up. However, I was looking to short because market was going up from oversold situation. It could give rise to a dead cat bounce or an ISOL failure or a flow short setup. And this stock was getting ready for a short setup. In the daily entry chart, daily interval, it was having trend line resistance, no trend line support. However, it had the yellow direction line support. I didn't intentionally share the ticker of the stock because it was not ripe for shorting yet. If the yellow direction line broke, it would break it with bearish relative performance, and that would be the time to short. And why I picked up this particular chart pattern is because I looked to the left, I saw that it was at jump thrust high at price extreme high, and it gave a big move down 3. More often than not, if the stock is fundamentally weak, it leads to a down move down the road, not very far down the road, and a profitable technique is to use short call vertical. But again, for the setup to confirm, this yellow direction line had to be broken. That did not happen. That's why actually I didn't send the ticker, share the ticker. And the weekly at the same time was already bearish. So that would certainly allow us to short the stock. Notice this pattern would have given something like a short setup, and short setup in a downtrending stock that was not so long ago was in a very much uptrend with jump thrust high, price extreme high. Those are very lucrative shorting ideas. However, that stock did not go below the yellow direction line. If I remember correctly, it would be Walmart, probably WMT. Let us look at the stock now. Now I am ready to share the ticker. It could be one of two stocks. Both had similar pattern. One was Walmart. It had and still has that trend line resistance, but I was waiting for the yellow direction line to be broken before taking a short. It did not break. The weekly is remaining bearish. Daily came to the trend line resistance. It gave two narrow body candles on Thursday and Friday. What did the market do on Thursday and Friday? They in fact rallied. This stock did not on Thursday, Friday. Before that, it went up from the yellow direction line. That is also something we would expect. But we already had jump thrust high, price extreme high, then a big move down 3. I am looking for this stock to continue the down move. And if that is so, next week, if it starts to go down from the declining trend line resistance, even better if it tries to go up and then creates a false upside breakout, that will be a time to short it with very narrow risk. Now, I did not look at its fundamentals. Remember that this pattern is very effective if the fundamentals are weak. So you may look at that. I don't want to do everything in this market recap for saving time for myself and yourself. You may check that out. The other stock, a similar stock in fact, that also had a similar chart, that was Kroger, KR. Let's have a look at Kroger also. Kroger also came to jump thrust high at price extreme high, then created a big move down 3. More often than not, very much more often than not, if the fundamentals are weak, that is a caveat, an important one. If the fundamentals are weak, it leads to a further down move. Here also, I was looking for price to go below this congestion area. It did not. If it breaks this congestion area, in fact, it has a trend line support now. If this trend line support is broken, I think there is a possibility to take a short trade here as well, as far as technicals are concerned. Incidentally, if you look back, the bearish headwind caught almost the very top of the stock. The headwinds are warning signals that I never ignore, and when I'm perusing the charts, I noticed that the bullish headwind in weekly came right at the very bottom. Never ignore the headwind signals because they may give us a heads up of a trend change at the extremes. We don't buy unless we have a proper buy setup. We don't short unless we have a proper short setup, but the headwinds at minimum helps us to protect profit in stocks in the prevailing trending direction, and it helps us to take a reversal trend if a proper setup is confirmed. In fact, if it breaks the trend line support now, that will be the first trend following short trade. It will create a lower high, lower low by that time. So a breakdown below this trend line support will be the first possible trend following short trade after this long up move. A pattern that I am anticipating in multiple market ETFs as well. And again, because these are happening at jump thrust high, price extreme high, at that high price level, this will tend to be lucrative shorting opportunities. You may use options also so long as you are managing risks. In fact, short call verticals work well, long put verticals work well as well. That is a pattern that I was looking for shorting. They did not materialize. Market went up, but market is not looking bullish to me. I am continuing to follow up on those stocks. Now coming back to the theme of investigating a bit more to find the best trading idea, aligning with the market and then find the best trading idea is looking at fundamentals. Can be daunting, but not so with Q Vital, and I wanted to explain that with subtle differences between two related stocks. In this tweet, 27th April, I shared this comment: using fundamental can be daunting but does not have to be. Vital scorecard is very valuable for trading because it does not only show a stock's strength or weakness in itself, but its relative strength with respect to peers with color coding. And this single page scorecard is something I always use before actually placing a trade. Let's look at this intentionally. As you can see, I have hidden the ticker symbol. The aim is to focus on the essentials. There are two stocks side by side, this one and this one. Let's see which one is fundamentally better and how easy it is to find out. The first ticker is undervalued with high earnings growth, with increasing earnings growth. We can see that in the graph also. With increasing revenue growth, we can see that in the graph also. With fund accumulation and a dividend yield of 6.78%. That's a huge percentage. Earnings season is here, so earnings is not far. As far as fundamentals are concerned, this is a stock I'd like to buy instantly. I can see undervaluation, high growth, accelerating growth, increasing revenue, fund accumulation, and a high dividend yield. It's a financial stocks. Remember, I mentioned after analyzing QQQ, I was not looking to buy technology stocks. I am often contrarian in that sense. I do my own analysis, decide what to buy, what to short. Now, the second one is also a financial stock that is also undervalued, that has high earnings growth, but earlier the earnings growth was negative. It is going up, but earnings growth was negative. Revenue growth is not so nice. It also has a nice dividend yield, but slightly less than the previous one, 6% dividend yield, 6.05 to be precise. And fund accumulation is yellow, neutral, not bullish as was in the last. If you flip back and forth between these two stocks, as far as fundamentals are concerned, using the color codes and the dividend yield, you would choose the first stock. What is this stock? Now let me share the ticker symbol. I first explained how to use QVital easily to find a strong stock and also find a relatively strong stock compared to another one. Both are in financial sector. what was this stock? It was ITUB. Let's look at it. ITUB. I often say that one of the strongest technical patterns is when we have weekly support and daily breakout. And ITUB, if I put it in Q Finder real-time scanner, it indeed gave us a breakout bullish setup on Friday with a fan out pattern with bullish traffic light. It went up by 3.1% on Friday. Relative performance is bullish, so it is outperforming the market. It went up with bullish pressure. It is still in a downtrend. Breakouts can happen in a downtrend. Breakouts can happen in uptrend. It can also happen in a sideways market. So ITUB gave us a breakout in a downtrend in daily, while weekly had a fantastic support. See how beautifully the weekly support held. And what happened in daily right at that point? It came to jump thrust low, sharply moving down, then came the bullish indecision cluster. One is important, a cluster is always more important. Take note of that. Then came bull release. The bears were giving up, but we would have to wait for a proper buy setup that came on Friday, a breakout in daily with a weekly trendline support. Notice how effective and valuable the two charts are together. If we just use the daily, we probably would not look to buy such a stock, but having the very reliable trendline support in the longer time frame is giving us, me at least, a confidence to buy. Also, if you notice carefully, it tried to go below the white direction line, created bullish indecision at jump thrust low, and then regained the white direction line, creating a false downside breakout. And it was an extreme move with jump thrust low that would have taken out many weak hands. Weekly support, daily breakout, that's a stock I'm ready to buy. And remember, I just showed this stock has a very high dividend yield. So I'm happy to buy it for the dividend as well. That provides extra cushion. I can simply hold the stock for its dividend if I need to. So it has a breakout setup, it has great fundamentals. Before buying, I would like to check its industry score as always. Let's go back to Q Vital in real time now. Create the scorecard once again, then I look up its industry score, industry score from QH. Scorecard is here, same that I shared in the tweet, strong. Let's look at the industry. And herein comes a matter that I discussed in yet another tweet. The industry, when you look at the QH score, is not strong enough, neither in terms of strength nor in terms of acceleration. So it tends to tell us that the fundamentals are good, a breakout is there, high dividend yield, we should not buy if we always buy in alignment with industry. But remember this week's webinar theme: investigate further, use a magnifying glass, look into detail. What is this stock? It is a financial stock. It is ITUB. What is that stock? Let's go back to QVital. Itaú Unibanco Holding SA doesn't sound like an American bank. If we read the description, it's a holding company, provides a range of financial products and services to individuals and corporate clients in Brazil and abroad. It's actually a South American bank, not an American, not a USA based bank. It's an ADR, it's a South American bank. That gives us some insight that we have to investigate a bit more. It is not an American bank. It is traded in the American exchange as well. We are happy to be able to buy it, but we need to look at its true industry strength looking at the South American market. That is this week's theme. Investigate more with easy to use systems, and that also relates to the other tweet of importance that I tweeted. We have a valuable program in Q Systems that looks at indexes, and this is NDX, the Nasdaq 100 index. Let's look at this. 1 month period is bearish. Just using color coding, I'm reading it. 10-day bearish, 5-day bullish. What happened after 5 days? 2 days is still bullish, but it is less than 5 days. 1 day, Friday is bullish, but even that is less bullish than 5 days. So once again, all the media news, or you may say hype, someone may say hype of tech stocks earnings, mega caps earnings boosting the strength of Nasdaq is not entirely true. 5-day period is more bullish than both 1 day and 2-day periods, meaning it actually weakened under the hood. That is not the picture of a market and index that is getting increasingly bullish, but it is bullish. If we look from 1 month to 1 day, we have to say it is bullish. Now this graph provides important information. It is bullish, but not what the market news is saying. It's not because of mega caps, I showed that. The graphs are not the only things to look at in this snapshot. We look at here. How did the instrument move? 1 month move is actually down long term. 10-day also down long term. Medium term bullish, short term bullish. If an instrument is long term bearish, short term bullish, it is worthwhile looking for a dead cat bounce or a recovery from oversold situation only for it to go down again, giving us a possible flow short setup. All those things you can read from this snapshot, both from the graphs and also from the percentage moves. What does it have to do with a South American bank? We'll soon find out. This is NDX, market hype or news, whatever you want to call, is saying that is very bullish. But let's look at the next index. And this index, I have hidden the ticker symbol intentionally. Aim is to be able to read the insight embedded in the graphs and the color coded percentage change instantly. Here also long term 1 month bearish, 10-day bearish. See the difference from NDX in the subsequent periods. 5-day bullish 62%, 2-day bullish 68%, 1-day bullish 87%. That is a much more bullish pattern. Not only is it turning from bearishness to bullishness, the bullishness is consistently increasing. That is where I would like to buy. Also, look at the 1 month percentage change, down by a minuscule 0.27%, and 10-day, the next long-term period is already bullish, 5-day, 2-day, 1-day, all bullish, consistently going up, flip back and forth. This is NDX, actually declining strength, though it is bullish from long term to short term. The strength is declining. Again, I am looking for something in a downtrend to recover and go down again. That is what I am reading from the percentage also. Whereas the second index is something that was coming down and now going up. I cannot anticipate a reversal because of the pattern I am reading here. And what is this index? Remember the stock that we found out, that was a South American, in fact a Brazilian stock, and this index is the Brazilian index. It is time to look at that index. Part of the Q Vital physical program, there is a logical program inside that for Q index. We are able to analyze any index in any country, anywhere in the world, and let's do that for BVSP, Bovespa. Is called Bovespa.bvsp. This is the exact pattern that I shared in the tweet. Long term bearish, then getting more and more and more bullish. Much more strength is shown in the percentage change. What do I do with this? I want to find out how are the diversified banks doing, because ITUB, the stock that I found out, viable candidate in terms of fundamentals, breakout in daily, great support in weekly, that was a diversified bank. But it's a South American bank using QH for North America in the United States of America, not Canada, United States of America, QH industry strength would not be the right thing to look at. Bovespa index is actually much stronger looking than QQQ. What about the diversified banks? Let's look at ITUB and do a peer finding from the index. ITUB, let me go down. Do a peer finding from the index and see the power of the system. I want to find out whether diversified banks are strong in the Brazilian market. Brazilian index itself is looking stronger than NDX. What do I see? 6 out of 6. That is all the diversified banks, that is peers of ITUB, this stock, they actually went up on Friday. All diversified banks. 100% went up. Well, Bovespa is stronger than QQQ. I already saw that. How did the diversified banks do in the USA? We can find that in QH. Let's go to the sectors. Drill down into financial sector. Diversified banks will be one of the industries. Clearly it is looking bearish, but if I drill down further into the constituent stocks of QH, what do I see? 56% went up, 44% came down. That is the mix, slightly bullish, somewhat neutral between up moves and down moves in diversified banks in USA. Whereas in Brazilian market, 100% of the diversified banks that are part of Bovespa went up. That is an industry I would like to buy. So ITUB in fact is a buy candidate in terms of industry strength also, and that is how you find out whether an ADR is viable as far as industry score is concerned. Cute, isn't it? Remember the theme of this session: investigate further. Don't suddenly stop by outward information. Drill down a bit more using the Q systems to find the real strength or weakness before deciding whether to buy. Now there is no reason for me not to buy this stock. Has high dividend as well, and yes, you guessed it, I did take a long position in this stock on Friday using the stocks. What about the other stock? In the tweet I showed two stocks. The first one happened to be a little bit stronger one, ITUB. That was ITUB. What was the second stock? I'll give you that ticker also. That is also viable, also has 6% dividend yield. What was this stock? It was a financial stock, but which country was it in? I hid it. The stock, I hid it, of course, because the only purpose was to be able to compare two scorecards and find out which one is stronger. The other stock was BSBR. What is the name? The name of the company is Banco Santander Brazil. Again, a South American, a Brazilian stock. We already established that industry in Brazil, diversified banks, is strong. What do I have here? Fantastic support in weekly. The bullish headwind once again miraculously caught the very bottom. Now we have fantastic weekly support, has a beautiful false downside breakout in weekly. In daily, once again, it came near jump thrust low. It also hit price extreme low, came up right from daily support with big move up 3. No reason not to buy because it also has high dividend yield, about 6%. Now, if you don't want to overexpose yourself to the same industry in the same country, you might consider buying only one of them. Both of them are viable for me. I did buy actually only one. I didn't want to buy two stocks in the same country, and the other stock had a better dividend yield. So I bought ITUB, though BSBR could also be bought looking at the charts and the fundamentals, and they are in the same industry. Interestingly, if I go to Q Edge, see, these tools allow us to investigate beautiful things. I am in the diversified banks industry. Not that way, what I wanted to show. Let's carry out a peer analysis of ITUB. I want to see how many of ITUB's peers went up. What am I trying to do? Let me think. There are many ways of doing that. Okay, let me do it in another way. In Q Finder, I have all these bullish candidates, possible buy candidates, 111. Let me create a scorecard of these stocks. Give it a few seconds. I want to explain something. See different ways you could look at the market if you wanted to play around with the systems to establish more and more confidence into buying a particular stock or particular category of stocks. I'm creating a scorecard of the stocks that gave a buy setup. Give it a few seconds. I think it will be something interesting when I complete this exercise. All these have buy setup, so yes, all of them are up. Let's go to the scorecard and now go to QH. The stock that I am thinking of, actually bought it, ITUB, is a diversified banks but Brazilian company. Now if I look for diversified bank stocks, among the stocks that gave a possible buy setup. So 111 stocks gave a possible buy setup. How many of them are in diversified banks? 5. All of them went up. BSBR is here, ITUB is here. What are the other stocks? BBAR, GGAL. If you look at their vital scorecard, you will find out these to be Argentinian stocks. Sweet, cute, isn't it? We are buying South American stocks based in Brazil and Argentina, another South American country. Two of their ADRs are also giving buy setups. They are in fact, fundamentally, I don't want to go into detail. There is another stock that is also giving a buy setup. You could look it up. It's actually a British company, not an American diversified bank. So diversified banks can be bought, but not in the USA market. I mean, not the stocks that are USA based stocks. We could buy South American, and I chose one of two, ITUB or BSBR. I bought ITUB because it has slightly more dividend yield. You can see that here also 6.8% for ITUB versus 6.1% for BSBR. One could buy both of them also. They are looking quite good to me. But as we saw, I compared the two scorecards. One thing that I look at is also the fund accumulation score. ITUB has a much better score than BSBR. That is a non-negligible factor I considered when choosing ITUB over BSBR. Not only dividend yield, but also this much better fund accumulation score. That is how you can use the different Q systems, firstly to find out what the media is telling is really true, or not. That was not true. We saw that yes, QQQ is strong, but Bovespa is stronger. We have diversified banks giving buy setups, but none of them are based in America. They are mostly South American. In South America, there are high dividend yield stocks with great support and breakouts. I would rather buy them. Are banks the only stocks that one could buy? No. And let me share another stock. I don't know how it closed. Let's see. That is a stock, Zoom, well-known company. That is a technology stock, but it is not really an US company. Yes, they have high percentage of revenue from US probably. But see the chart pattern. Triple bottom in weekly, jump thrust low and price extreme low in weekly. And what happened this week? A beautiful bullish reversal with bull release with a false downside breakout. That's a stock I'm willing to buy if the fundamentals are strong. We have bullish flow on Friday. Let's look at its fundamentals. Zoom. While the fundamental scorecard is getting calculated for peers, let's look at the industry strength. Improving strength, and we can see whether it is worth buying or not. Yes, because it has acceleration. In fact, one of the best accelerating stocks over 5 days, and it is reversing from triple bottom in weekly. So industry allows me to buy. Let's go to the stock scorecard again. Great valuation, great earnings quality, steady earnings growth over last 3 quarters, last 3 years, steady revenue growth over last 3 quarters, last 3 years, strong fund accumulation. Analysts are bullish if you want to pay attention to that. 79% of peer stocks went up on Friday. That's a stock I'm willing to buy. And I took a long position in Zoom using options. If you are confident to hold it long term, if you get assigned, looking at the weekly pattern of triple bottom and great fundamentals fund accumulation, you could consider using short put, naked short put. However, in that case, you would be ready, hopefully, to hold the stock long term if required, if you get assigned. Or you could always go for short call vertical. I'm sorry, not short call. You could go for short put vertical, that is a low risk, defined risk, safe trade in this situation. This is earnings season, so let's look at the earnings date, 20th May. So you may take it into account while trading the instrument. Still some distance away, it could be traded using stocks as well. So we found a stock that is technology stock, but not the mega caps. In fact, whether a stock is mega cap, large cap, mid cap, small cap, we can find out from this color coding. It's a large cap and it is at a low price, unlike some of the mega caps like Google that are at extremely high price. And here fund accumulation is giving me the confidence. I usually don't look at so many stocks in the session. You see, I can find strong buying candidates looking at 360 degrees analysis in any market. And they may not be what the media is prompting me or you to buy. Let me share two more stocks if you allow me. I know I'm at 1 hour point. It's not for sharing trading ideas all the time. It's about the systematic approach that gives one confidence to keep on trading. And you will have high success rate. GOLD. It's a gold mining company. While the peer analysis is getting done, let's look at the industry score, all done in real time. Here the industry score is not so strong. It's a gold mining stock. It was bullish, but it weakened. If next week it goes up, the industry goes up, that will be a time to buy. But what caught my attention are few things. Excellent earnings growth and accelerating earnings growth for 3 quarters. Steady revenue growth also. Great fund accumulation, and if you are follower of Mr. Ian Woodward, may him rest in peace, I never ignored this. It's a box stock. Now, relatively, it is not one of the strongest. We saw that in QH, the industry. Relatively, it is not one of the strongest. However, Q Vital is showing 80% of peer stocks went up on Friday. So in itself, it could be bought. Let's look at the stock chart now. GOLD. I wouldn't mind buying this stock. The buy setup actually came on Thursday in daily. It had excellent trendline support with a bullish flow, that is a trend following long setup, and also a pullback long setup. A stock in an uptrend, pullback to support the yellow direction line. In fact, in this case, the white direction line also go up from there. It actually created a fan out pattern as well, because it went below 1 2 3 4 5. It went below 5 of 5 direction lines, regained 5 of 5 direction lines. That's the strongest possible fan out pattern with a bullish flow and a pullback setup that came on Thursday. Friday price did not change much. Weekly is at a point from where it may go up. It has found support. We can see that from the long lower tail 1 week ago, bullish candle of this week. I in fact took a long position in GOLD as well. Again, I did not put less weightage to it being a box stock, funds accumulating the stock, the great earnings growth, steady revenue growth, and the fact that 80% PR stocks went up. That was not all. I have all the systems, so I did look at dollar index as well. Let's have a look at that. In the weekly, dollar index is moving sideways as far as closing is concerned for 3 weeks in a row. Last time it did that for 3 weeks in a row, moved sideways. After that, it went up. Will it go up now? Could be. That will continue the stair step pattern. But we don't know that yet. We have 3 weeks of closing at almost the same price. Daily is still in an uptrend. It will not be surprising for dollar index to come down to this level where it will find too many supports. And probably those supports will hold, at least one of them. Just too many supports are there at that point. But it is not unthinkable for dollar index to come down little bit, and that may help gold, and gold may influence gold mining stocks. Those are so many if and if. But even if we leave the analysis of dollar index and its potential impact on gold and gold mining stocks, in itself the chart of GOLD and the fact it's a fund accumulating stock, nice pullback setup, flow setup with a box stock, I don't mind buying it. I have a long position in gold, and I am going to share one last stock. See how I am finding stocks, and let's start with technical. Oh, why not start with Vital? Let it create the scorecard, and I will come back to technicals at the same time. Use Q Global. I'm liking Metastock 19 more. I'm using it. GPS, a well-known stock, not at a high price level. In fact, it is creating a beautiful pattern again. The stock rallied in weekly, came down, beautiful bearish headwind at the very top, near the very top, came to where the congestion area, where we had a trend line support ready for it to catch the stock. It did it successfully, closed the week with a bullish shape, almost a bounce pattern. It did not actually hit the trend line support, came very close to it. Technical analysis is like that. We don't have to be exactly accurate 100% that it has to touch the trend line support and bounce, not like that. It has a beautiful bounce, and in daily it came to the trend line support, created a bullish indecision, then a bull release signal, and the traffic light momentum turned bullish. Technically, this is a stock I will like to buy because I could put stop just below the trend line support. I would like to buy provided its fundamentals are strong. By now, QVital has told me that enough reason for me to buy. Great valuation, fantastic earnings growth, accelerating earnings growth, improving revenue growth, fund accumulation, undervaluation here, some dividend yield of 2.8%. Analysts are bullish if you want to put any weightage on that. 90% of peer stocks went up on Friday, and let's look at its industry score. Great industry. I'd like to buy here. One of the strongest industries, weekend in the middle, now one of the strongest in the USA market. GPS gaps. I have a long position in gaps. Again, you could use the stock here also. The stop is narrow. Let's look at the earnings period. 23rd May is the earnings here. We are still in April, so we have enough time before the earnings. Therefore, we could trade it using stocks, putting stop just below the trend line support using Q protection level. It could be traded with short put vertical, very effective defined risk strategy where we don't have to apply a stop loss, we don't have the chance of getting whipsawed. Or if you are willing to hold the stock long term, if you get assigned, you could also use naked put. Now, when I look at this pattern here and here, a congestion pattern, I would like to also look at the resistance support chart that is on Q Global on Metastock 19 that has the volume on price plot. And I looked at all of this before I took a long position. Volume in price plot is saying that there is a high likelihood that the stock will be attracted to this level. It may go up, but it will likely find support here. The next level is far below, but there are trend line supports before that which will act as effective support. So when I looked at that, that would give some additional confidence probably if you use the volume at price plot to trade it using either short put vertical where time decay will be in your favor, or naked short put if you are willing to hold the stock long term if you get assigned. The final decision is yours, but Q Systems allows you to find the instrument to buy in any market condition. The strategy of whether to use stocks or short put naked or short put vertical is of course your own. I'm comfortable trading all of them because I have a basket of stocks traded. I don't worry if a particular stock goes into loss. Overall, I tend to have a profit in any market condition. That is my market view. It is bullish. I am buying some stocks, but I am also ready to short stocks if what I explained come true. That is, if we start having the first bearish flow setup in multiple market ETFs. And interestingly, the stocks that I bought, they all have support nearby, or they are high dividend yield stocks. Some of them are not so much US dependent. I think Zoom is one such stock. GAPS is a more American stock than the others I shared. One is gold mining, that is not so much dependent on American economy as such. And the South American bank is a safe bet because it has high dividend yield. That is how we don't just take whatever the media says or another analyst says or even I say at face value. We have the tools to investigate a little more using simple clicks, visual analysis, find out what is really going on, find the best stocks to buy as per our liking and trade that. We can do all that in real time using the most reliable data available to anyone, that is the Refinitiv data. Thanks a lot for attending. I look forward to seeing you again in my next weekly session. Have a great weekend. And as I always say, as these sessions hopefully show, there is no reason not to do that. Trade profitably. Thank you.